Hello and welcome to Questioning the Manager. Today we have John Petullo, Fund Manager of Henderson Diversified Income. Now this is a dynamic bond fund, able to invest in any area of the bond markets, both fixed and floating rate, and it will depend on where him and his co-manager Jenna Barnard take a view on the wider global economy. John, welcome to Questioning the Manager. Okay, let's start with central banks. It seems the rhetoric coming out of them seems to be a little bit more hawkish than it has been in recent history. So do you want to explain what's going on?
Yeah, it's a little bit confusing in some ways, because central banks, I think, want to talk a little bit tough because they kind of have to at this time in the economic cycle. On the face of it, it looks a bit bizarre because there is still a lack of core inflation and not much growth in the world. So them to start talking more hawkish is unusual. Some of it was kicked off by Canada, who really want to reverse some interest rate cuts they had a couple of years ago. So don't get confused. I think the central banks are really talking less dovishly, not so much massively hawkish. Another view is Janet Yellen, the Fed governor, is potentially her job ends at the end of February next year, 2018. She may get renewed, she may not, and governors like a legacy, and they don't want to go out to be seen too dovish. And then the third view is some people said, well, they're trying to get up interest rates now because they can, so that they don't want to cause the next recession, so that they can then cut interest rates in time for the next recession. So a number of views, but Draghi had similar views as well, and some back and forth from the ECB. The Bank of England also had a few contradictory statements from some members. There's nothing particularly wrong with that, but in our view, I don't think the economic data and the inflation data justifies being massively hawkish as we stand today.
Okay, John, after Trump's election, we saw a lot of excitement in the equity markets about the Trumpflation trade, this idea that inflation was going to come back and growth was going to come back. We saw a lot of rotation towards cyclicals, value, and financial stocks. So where is inflation?
Yeah, well, it's kind of hilarious in some ways because Trump has achieved absolutely nothing. I mean, absolutely nothing. Yeah. The world was growing pre-Trump because China reflated the world in early 2016. So there was a global synchronized uptick in activity from June of last year. He got elected in October. So he will, of course, take all the credit for the Trump reflation trade, but it had nothing to do with him. Inflation expectations and growth expectations rose by about 0.5%, if not more. There was, as you say, rotation in equities towards cyclicals and value stocks and financials, which have done well. That then faded, really, because there didn't seem to be much structural change in growth. And there was certainly no structural change in inflation expectations. There was a cyclical uptick in inflation expectations. But broadly speaking, amazingly, inflation continues to surprise on the downside, consistently so, and we can expand on that in a second in the next question. And generally it's faded. Tech still plows on, but tech it's got its own growth driver. And tech really accounts for a massive amount of the growth of earnings in emerging markets and in American stock markets. So it's a kind of mixed picture. But broadly speaking, you've had a little bit more growth, but really disappointing amounts of core inflation on the global scale, which isn't a great surprise to us because we've been kind of saying that for a long time, but it is a fascinating backdrop.
In a recent article, you were talking about where we are in the economic cycle and that we were stuck in the 7th innings. Did you want to explain what you mean by this?
Yeah, I mean, this credit cycle is bizarre and unusual. It's very, very, very long. Cycles tend to end because there's too much growth and there's too much inflation and interest rates go up to check inflation. It doesn't feel like that this time because there isn't really any inflation and most central banks are short of inflation. They're behind or below target on inflation. I think there's some pockets of excess in American credit, in student loans, in auto loans, credit cards to some extent. That's true of some unsecured lending in the UK as well. But we don't think they're particularly systemic. They're just sort of pockets of excess. The American cycle is looking a bit late in the day, to be fair. Europe, as ever, is years behind the American cycle and not, in our opinion, particularly late.
Okay, finally, John, do you want to just give us a view on the income outlook for the portfolio?
Yeah, well, the distributions are vital, the dividends we pay out to shareholders, so they will remain as they are, pretty stable. We're very focused on achieving them. Defaults are very, very low. So we're pretty confident of maintaining the current level of income for our shareholders.
John Petullo, thank you.